Somewhere right now, someone is trading $100,000 they don't own and keeping 80% of every dollar they make. They didn't borrow it from a bank. They didn't have a rich uncle. They passed a test. And the company that gave them that money? They've never met the trader. They don't care where they went to school. They care about one thing only: whether the trader can make money without blowing up. These companies are called proprietary trading firms, prop firms for short. And they're quietly one of the most interesting financial models almost nobody talks about. By the end of this video, you're going to understand exactly how these firms make money, why they give capital to complete strangers, and this is the part most people miss, what the catch actually is. Because there is a catch. There's always a catch. But it's not the one you think. Let's start from scratch. A proprietary trading firm is a company that deploys its own capital, not client money, not investor money, their own, into financial markets. Futures, forex, equities, crypto, wherever they think edge exists. Traditional finance is about managing other people's money. A hedge fund takes investor capital and charges fees. A bank trades on behalf of clients. But a prop firm? They're in the market for themselves. That structure changed completely about 10 years ago with a model called the retail prop firm, or the funded account model. And that's what most people mean today when they say prop firm. Here's how it works. Instead of hiring traders and putting them in an office, these firms say, prove to us you can trade. Do it on a simulated account. Hit our targets, stay inside our risk rules. Pass, and we'll fund you with real capital, their capital, and you split the profits. Now here's where it gets interesting, and where a lot of people get confused. The firm charges you a fee to take the evaluation. Somewhere between $100 and $700 typically, depending on the account size you want. That fee is not a deposit. You don't get it back if you fail. It's the cost of entry. Now, most people fail. That's just the math. And here's something most videos won't tell you. For many of these firms, the evaluation fees are the primary revenue stream, not the trading, the fees. That doesn't automatically make them a scam. Some firms are legitimate, well-capitalized, and pay out consistently. Others are built almost entirely on the fee model with very little actual funding behind it. Knowing the difference matters. We'll cover that in a separate video. For the traders who do pass, and funded traders do exist, they do get paid, the profit split is usually somewhere between 70 and 90% in the trader's favor. On a $100,000 account, that means if you make $5,000 in a month, you keep $4,000. So what's the catch? We said there was one. Here it is. The rules. Every prop firm has a set of rules that govern how you're allowed to trade. Maximum daily loss. Maximum total drawdown. Minimum number of trading days. Profit targets you have to hit. And if you break any single rule, even once, your account is terminated. Immediately. No appeal. You're done. That's not a horror story. That's the model. The firm is using those rules to protect their capital. Which means the real skill isn't just making money in the market, it's making money under constraints. That's a fundamentally different discipline. And most retail traders underestimate how different it is. So who are prop firms actually built for? Honestly, traders who have genuine skill but limited capital. That's the value proposition in one sentence. If you have $10,000 saved and a solid trading strategy, your upside is limited by your account size. But if you can pass a prop firm challenge, that same strategy on a $100,000 account is 10 times the return. In theory. The best prop firms in the space right now, TopStepX, Apex, FTMO, MyFunded Futures, they all run on variations of this model. Different rules, different fees, different markets. But the core idea is the same, and the industry has grown from a niche corner of trading forums into a multi-hundred-million-dollar market. Because the idea works. For the right person. So that's the foundation. Prop trading firms take on traders with skill, give them access to real capital, protect themselves with strict risk rules, and take a cut of the profits. Some are well run and legitimate. Some exist primarily to collect evaluation fees. The difference is worth understanding before you pay a single dollar. If you want to go deeper, the next video breaks down exactly how to evaluate whether a prop firm is worth your time and your money. The red flags, the green flags, and the questions you should be asking before you even look at the rules. That video is right here.